Hello, everybody. It is another edition of YouTube Live, Everything Phoenix here. It's Thursday. It is 4 o'clock Pacific Standard Time, although I am not actually in the office. I'm actually on a summer vacation with my family, of all places, Hilton Head, South Carolina. So this place is awesome. We go here about once a week. Once a week. We go for a little while once a year. And kids absolutely love it, guys. If you haven't had a chance to visit Hilton Head, South Carolina, I highly recommend it. It is a absolute blast. A lot of things to do. So, little summer vacation, and so we're doing YouTube Live. We try not to miss ever YouTube Live, and so far we haven't since we've been going live. We've been pretty consistent every single Thursday, coming live to bring you the most up-to-date market information and development news happening in Phoenix, so that you're fully informed. So, this was a big week. We had actually the Fed come out yesterday and announced anything they had with their plans for rate changes. And the market was thinking they were going to actually increase rates, the federal funds rate, that is. And they did not. They actually did not increase the federal funds rate. They kept it steady. We're going to dive into that in a little bit because there's some hidden messages that they had in with that announcement, that decision, I should say. But before we go into that and some of the market updates, if you could, let us know where you're listening from. I'm in South Carolina, still bringing you Everything Phoenix because even the people in Everything Phoenix here, right, myself, have to have some sort of downtime. And I would love to know where you're listening from if you are tuning in today. And then we are going to obviously I'd love to have any type of two-way conversations. That's always good. Please comment and question anything you have that we're talking about today, because if you're thinking of it, someone else is probably thinking it too. So speak up. Thanks, guys, as always. All right, so I'm going to share my screen as I always do, because I need you guys to get informed here on the market. So even the Cromford report, guys, the Cromford report right here is saying they're going on vacation. Mike, who is actually the gentleman who runs the Cromford report, and his assistant Tina, which is awesome, is going out of town for 2 weeks. So they're going to have a pause on some things as well. Not all data, because the market continues, but some stuff. So we're going to dive right into monthly average sales price per square foot, guys. Look at that chart. I know we talked about this multiple times actually on our YouTube channel here, but we're going to keep talking about it because the Cromford's talking about it because it is still the news. You can see right here that the price has continued to increase ever since the low in December of 2022 last year. So in the Phoenix Metro, guys, and it's not because demand is so high, okay? Demand is actually lower than it normally is this time of year. It is because supply is so low. Yet that is keeping prices going up, which is not what the Fed wants to see here in Phoenix. Now, there's some other cities, guys, I know that are experiencing this too right now in their marketplace. And with other cities that have a Midwest feel and East Coast flair, their summertime is usually the busiest time for their housing market, whereas Phoenix, come July, will typically naturally slow down. That being said, I think you're going to see the Fed kind of disappointed in the fact that a lot of these cities may have increasing appreciation or sales prices throughout the next couple of months of the summer. That is what's very interesting. Now, if I go over here to the Fed, let's jump right into that because we're hitting on it. Let's get right to it. So this is yesterday. This is Jerome Powell and Co., right? And Co., the company, saying they have not raised the federal funds rate, which the markets kind of thought they would. However, they are hinting, if you look at this article, they're hinting that the Federal Reserve actually is hinting that they will probably raise rates 2 more times this year. Don't be surprised if they raise rates 2 more times this year. Now, we're midway through the year, so that could signal that they believe that maybe inflation is getting under control a little bit, but yet prices and affordability are continuing. The economy is continuing to go up, so to speak. And so they will continue to try to stall the economy any way they can to bring down inflation. So if you read this article right here, guys, on CNBC, you can see right now that bringing rates to 5.6% at the end of this year. The S&P finished nearly flat while the Dow Jones obviously dipped. So the markets reacted to this news not too favorably. Primarily, guys, because they hinted that rates will probably be going up a couple times still more this year. So if you read here, right here, it says the hawkish pause, as so many analysts pointed out, meaning that the Fed might still swoop in and with more hikes later this year, as the central banks itself projected. So that's what's keeping everybody like, well, you didn't raise rates this time, great, but you're saying you're going to pretty much do it the next couple times here next year. So you're not necessarily saying we're out of the woods and that the economy is going in the direction you want it to go. That being said, it's kind of interesting to see what will happen. So this is all talking about what's going on with the Fed, and it's actually really intriguing, guys. So let's look at rates. Rates right here. The 30-year mortgage rate, 6.94%. 6.94%, guys. That is down a little bit. They were hovering, again, as we know, around that 7% mark. So we would love to see rates come down a little bit, but unfortunately, they might just continue to stay and hover where they are in the short term. So unfortunately, I wish I had better news for that. But my guess, if I had my crystal ball, right, my hat's off, my hair is shaven off my head, it's bald, I'm going to rub that thing. I'm going to say, guys, we're probably looking here at a few more months where the rates are going to stay about the same, probably in that high 6 mark, maybe in the low 7s. And I don't know if it's going to change anytime soon, especially when most of the country is actually going to experience probably the most demand they're going to have all year long, because that's a natural cycle of the market for most markets across the United States of America. Now, when you get to Phoenix, you're going to probably see a slowdown because it happens every year, especially after the July 4th weekend. The month of July is the slowest month of the year, unless it's a post-COVID year. That's the odd year out. That being said, when you have rates still being fairly high and you have demand shrinking a little bit more, we'll see what happens. But as demand shrinks more, guys, the supply amount probably will shrink even further. That's what we're seeing right now with supply and demand going in opposite directions here in Phoenix. So it'll be interesting to see what happens going in September. But typically in September, guys, you start to see in September that the market starts to go up from being flat, if not going down a little bit when it comes to the amount of sales, amount of listings selling, to going back up as it rallies through December, because the market starts to get hotter as people return to the normal way of life, with school being in place, kids being back in school, and the weather's starting to cool down. More people start to visit Phoenix. So that's kind of what we're seeing here. So it'll be interesting to see, but I think the market overall is going to be somewhat slower moving as we head over the next couple of months. So I'm going to share my screen again here, and we're going to talk about the Cromford report here, going back to it, and you can see that right now that will probably curtail, that will probably change a little bit as we head over the next couple of months. But what's very intriguing, guys, is that the market is rebounding nicely, and it's not where it was in May of last year, which is the height, but it's rebounded nicely to only be off with the median price point by just a few percentage points from where it was. All right, so you can see right here with the commentary, we can see that the low point of mid-January right here on this graph, guys. Let me just pull this back up here so you can see it. Okay. It was $264 a square foot, is no way behind us, and the average sales price has risen to almost $287 on a price per square foot basis as of June 12th. That's a rise of nearly 9% in just 5 months. 5 months. It's equivalent to an annual appreciation rate of over 20%. So you can see right now, if we stay on the same pace we have been since January, guys, we're looking at 20% appreciation. 20% appreciation for the Phoenix housing metro market. That's insane. Now, I don't think it's going to happen. And Cromford is saying that that's not necessarily going to happen, but that's the pace we are on right now. But we're going to hit the summer months, and most likely it's going to flatten out. So we'll see what happens by the end of this year. But as of right now, we are 9 percentage points. Excuse me. I'm getting all excited, right? Appreciation. I'm getting all excited. Oh my goodness. 9 percentage points up this year on appreciation. So again, if you bought a house December and closed on it December of 2022, November of 2022, you're looking pretty nice right now in terms of your return on equity. Now, obviously, if you bought a home in May or June of 2022, you're about even. Matter of fact, you're probably up a little bit potentially. Maybe it depends where you are in the valley, but you took a nosedive all the way through the end of the year, and now you're riding that wave back up somewhat. Okay. So what I love is what she says here is this is probably a great disappointment to the Federal Reserve because they want to stall the economy, buyers in general as well, because they want affordability, they want prices to come down, and especially the naysayers, the doom and gloomers and naysayers, guys. Hey, naysayers, just calm down, right? Who predicted the great housing market crash of 2023 is coming. And right now, that's just not happening. However, it should come as no surprise to those who keep track of the Cromford report. The CMI was issuing strong positive signals in January, guys. And as we talked about on the show, if you follow the CMI, it's going to give you the heartbeat, the pulse of the market. Because remember, it's a Titanic, it's a yacht, it's slow moving. It's going to give you the signals, the indicators of what the market's going to be doing probably about 2 to 3 months from now if you follow it, because you won't see those results for 2 to 3 months. So you're ahead of the curve by following the Cromford Market Index. Okay. All right. And you guys, this is a week ago. So it's not up to speed on this, and it's going to be a little while for us to get updated. But you can see right now, as a week ago, everything is green except for one area of town for whatever reason. That's Goodyear. I don't know why that is. It's down 1%, but it's still a seller's market. All 17 suburbs and the main city of obviously Phoenix is in the green, is going up when it comes to the Cromford Market Index. And boy, Chandler is just leading the way. Look at the Southeast Valley, Chandler and Gilbert. Holy cow. Leading the way, guys. Okay, so now if I jump, I'm going to share my screen and show you this real quick while I'm talking about the market, okay? So if I go here, right, I'm going to share my screen. I'm going to show you this Word document, guys, because this Word document, I posted this here, if I can find it for you. Here we go, right here, okay? Check this out, guys. Monthly median sales price. This is good that I get it because I was in a crunch I'm on vacation here trying to just put some stuff together here for this, but this was interesting. Look at this graph. Okay, if you're a median sales price person, which you should be really, because that's more representative of everything over averages, okay? The median sales price. In May of 22, which is the height, it was 480 here in the Phoenix metro area. 480, you can see it right here, okay? And then you can see different dates. It went to 476 in June, and then all the way down October, November, a falling knife, right? December to 415, guys. Went from 480 to 415 in the course of about 6 to 7 months. And then it flattened out, and then it got better. And now as of June 23rd, we're at 445. 445, guys, on a median price June. So we are just 7.3% off the peak. We now recovered nearly 50% of the value loss in 2022. Over 50% of the value loss in 2022. So this is just stats, guys. This is stats. This is data. This is not someone's emotional opinion. This is not a talking head on the news. This is YouTube Live, Everything Phoenix, where we're just going to go and give you facts, give you both sides of the story. You can figure out then what is best for you in terms of what you think is happening. Okay, so guys, you can see right now our market is recovering. Now, I know I put 20% plus question mark right on the advertisement for this YouTube Live, but we don't believe there's going to be 20% appreciation this year. Trust me, we do not believe that. I can't imagine a scenario that's going to happen at this point. But 9% already, and we're probably going to flatten out throughout the summer and maybe even have a little bit more of a gain if nothing changes in terms of supply and demand by the end of the year. So we could be talking double digits of appreciation, 10, 11% by the end of 2023 for the year of 2023. That is the definition of resilient right there, okay? So now I'm going to share my screen again, okay, because I want to show you a couple things that are going on here in the Valley that I think are very important from a development standpoint, guys, okay? A development standpoint, and we're going to dive into that right now. So you see my screen? Okay, here we go. A couple things which I thought was interesting for those of you who golf, because the U.S. Open's on right now, and I'm in a golfing community. So I enjoy it. You can see right now, Grayhawk Golf Club, guys, which is a very, very, I should say, public. It's a public course. Was very, very popular. That's what I'm looking for. Thank you. Popular public course is just acquired by Arcis Golf, which now has 16 courses in Arizona. And because we're in the U.S. Open theme right now, and the major has kicked off today here in Los Angeles. This is interesting that if anybody has Grayhawk Golf Club, you now know it's owned under different management. So, and it's a pretty popular club in North Scottsdale. Okay, just thought I'd throw that in there right off the bat because it's a golfing weekend here across America with the U.S. Open starting. All right, so John Wayne's Red River Ranch in South Phoenix. It's a 9-acre community proposed. Okay, that's the next supposed hotspot. It is a 1,700-acre parcel on the northeast corner of Maricopa and Miller Roads between Maricopa and Casa Grande, land formerly served as a comic actor John Wayne's Red River Ranch. Now you see right here with this this map here. Now it's subject to be developed potentially, right? So I thought that was interesting, guys. We're trying to give you some just fun facts, okay? But it was acquired for $44 million. Pretty crazy, right? There's a lot of land being bought, a lot of big land being bought right now here throughout the valley. Okay, clothing retailer, some other deals you need to know, guys, because we're trying to keep you informed with development and what's going on real estate-wise here in the Phoenix area, as well as some fun stuff like John Wayne's land that he used to own. The clothing retailer Reformation and Home Depot plan new Valley locations, more real estate deals to know. All right, that's what their show's about. So we're going to talk about it now. We talked about this a few weeks ago here on YouTube Live. The South Pier at Tempe Town Lake is a waterfront mixed-use project that will include 724 residential units and 26,000 square feet of retail space in Tempe, guys. This is the best you're going to get to waterfront. Scottsdale, Old Town Scottsdale has the waterfront residences, the condos, high-rise condos, which are beautiful, luxury living, but it's on a canal. We just call it waterfront. That's the best we have because we're in the desert. However, Tempe does have the Tempe Town Lake, which I've done a couple Ironmans in that, actually 3. And it's, if you swim in it, it's not great. Let's put it that way. But looking at it, it looks beautiful, especially at night with the lights reflecting on it. It looks great. And you're going to have more glass buildings going on the waterfront side of Tempe Town Lake, which is very interesting. It's going to be beautiful, guys. So wanted to talk about that. Clothing retailer Reformation, okay? They are opening at the Scottsdale Quarter. Guys, Scottsdale Quarter right next to the Kierland area in North Scottsdale is phenomenal. And it's just one more amazing name. That's brand name is going to be there for you to, and anybody who obviously wants to visit the Scottsdale area to enjoy and shop, right? Okay. And then it talks about Puttshack too, which we're going to hit in a second because that's pretty cool. South of Phoenix, Home Depot plans to build a hardware store in the city of Maricopa. The new store will total about 108,000 square feet, guys. So big news, Home Depot. They're everywhere, but they are building in Maricopa, which is on the far, far south part of the Phoenix area. And just some other small deals. Not a whole lot of news going on, guys. This will be a smaller, abbreviated version of YouTube Live, Everything Phoenix here today. But this is the big one I wanted you guys to hear about because it's Google. Everyone knows Google. Everyone loves, well, not everyone loves Google, but Google's a necessary evil that we all have to use. They have the market share on search. Mesa here is building design plans for first phase of Google's $1 billion data center campus, guys. So this is awesome. Mesa is going to get the contract, it looks like here, for Google's data center, right? So the first phase of Google's $1 billion data center campus went in front of Mesa's design review board on Tuesday. The code name is Redhawk. This is interesting, right? It's on 185 acres near northwest corner of Sossaman and Elliott Roads. The first phase will include 288,000 square foot data center with a switchyard, a substation, and security kiosks, public road improvements, and an employee office building. And that's not it, guys. They are then going to build 2 additional phases, which are not even discussed yet, guys. So Google obviously is Google. They are huge. But what's interesting is the aspect, the logistics of how they're designing this this contract. Google purchased the land on a 25-year government property lease excise tax, okay? Meaning it will deed the land to the city for 25 years. That's interesting, right? It will give Google millions of dollars in property tax breaks, okay, of course, But the city of Mesa expects to collect nearly $33 million in excise taxes over 25 years. The city's Economic Development Office estimates the entire state, local, county tax revenue will be $156 million. That is huge for not just the city of Mesa, but for the Phoenix metro area overall. So it's awesome they're coming here and investing. But this campus, the tech corridor on East Mesa, already has other big names down there, guys, like Apple. Here you go. Apple and Meta platforms are also tenants in the corridor with its own data centers already down in the East Mesa area. So Amazon is building a huge distribution center right here. It's a $1.2 million square footage storage and distribution center, guys, in East Mesa. So you got Amazon, you got basically the big leaders of the S&P 500 all coming to Mesa's East tech corridor. So that's going to be huge, guys, for the Phoenix area. So that's awesome. Lori, what's going on? Wow, can I buy an investment property near that new Google site? Yes. Matter of fact, real estate around that area is actually fairly cheap. What's interesting, I'm glad you brought that up because I think it's very, very smart with how you're thinking about that. What's interesting is you also have the Legacy Sports Complex out there too. So that's and you got Eastmark, which is a big master plan community, award-winning master plan community. So you have all this going on out there. And I think the play is if you could find something, especially that's a vacation rental. Now, guys, Phoenix has been beat up on the vacation rental side, right? It's been beat up. A lot of people jumped in because the Super Bowl was coming to town here. The rental rates, the vacancy rates were high compared to what they had been in the past. And so a lot of people who had vacation rentals have sold or gotten out or transitioned to a long-term rental. However, I do think there's a play out in East Mesa with this, because of what we just discussed in terms of all the household mega S&P 500 companies that are investing now in East Phoenix or East Mesa especially. But you also have, like I said, the Legacy Sports Complex. There are tournaments for, I'm going to miss some here, but pickleball, soccer, football, flag football, basketball, volleyball happening every single weekend or during the week, for all I know, at the Legacy Sports Content. The complex is huge. And so if there are people traveling from all over the country actually to for their kids playing sports, whatever it may be, adult leagues, tournaments that are playing, and they need lodging. So it wouldn't be a bad idea for cash flow in the interim, as well as, or like Lori said, if you just want a long-term investment, just buy and hold something and rent it out long-term, which won't, have a lot to do with that, but will potentially provide housing to, an employee that's looking to move for Google or Apple or whatever. And they're not sure where they want to buy, or if they want to buy, so they rent for a year at least, and there you go. So I think that's a big play on investment speculation for the East Mesa area because of all this development. Okay, so Abby, what's going on? Is this over by Eastmark? Yes, opposite. Yeah. So there's a new interstate called the 24 that was actually just put in, which is huge because it basically connects this tech corridor right by the Williams Gateway Airport. The Williamsville Gateway Airport, and that's huge because it is actually making the commute times and the traffic flow from the 202 and the 60 right down in there to the 24. So you don't have to just take Elliott Road, I believe it's Elliott. Not Elliott. I can't think of it now, but the main thoroughfare that goes north and south right down through that area all the way down through Queen Creek. So yes, that's huge. And you said, never mind. Just mentioned, I read your mind, Abby. It's like the Jedi mind trick right there. Just had you. Okay. So now going back over to the share my screen. We talked about that Google Center, and now let's talk about Puttshack. Okay. Puttshack is something we just mentioned actually, and we'll wrap this up here in just a second because we'll just end on this, guys, because there's not a lot going on with development in Phoenix this week. Not a lot of news, and the market's doing well. Let's see how that keeps going. But Puttshack is huge, guys. There's also Putter's World. Tiger Woods came out with a new putting concept out there in the West Valley by where the Arizona Cardinals play football. And now they actually are coming out with Tiger Woods is building that same concept actually in the area off of the Arizona Boardwalk in Scottsdale. So from that standpoint, you have a lot going on, and And I think that it's going to be even bigger and bigger as golf just continues to take a hold and on Scottsdale, right? That's why I'm going to bring up the whole Grayhawk aspect too. So you have that going on, and now you have Puttshack, guys. Puttshack is happening right here in the Scottsdale quarter, and in Arizona, you need air conditioning in the summertime if you want year-round business, right? It's hard to ask someone to go play putt when it's I don't know 2 o'clock in the afternoon on July 10th or something, right? So here we go. Luxury miniature golf is getting the full swing in the valley as Puttshack gets ready to open at the Scottsdale Quarter. It's a 25,000 square foot destination, which will hold its grand opening on June 14th. I can't wait. All right, just happened actually. Mini golf takes place across 4 courses that are designed for competition beyond the game itself, with interactive games at each hole. Puttshack tracks the balls, and scores are kept automatically as players work their way through holes with names such as Ring of Fire, Half Pipe, and Drum Roll. This is awesome, guys. DJs provide musical entertainment on Thursdays, Fridays, and Saturday evenings as well. Puttshack's truly unique spirited energy matches the atmosphere at Scottsdale Quarter perfectly and will provide Scottsdale residents with visitors with a fantastic destination to spend time with family and friends. I totally agree. There it is right there in Scottsdale Quarter, guys. Scottsdale Quarter has so many things. It's not even funny, but now Puttshack. And you can eat there. You can drink there and have just a great time. But you have this going on, and I'm telling you guys, check out Puttshack. That's going to be a blast. I can't wait to take my family there. It's probably not cheap, but right now I'm out in Hilton Head, South Carolina, and there's a lot of golf going on here, and they have outdoor putting. Well, it's hot here too. And if I could go inside and actually do the putting, that's what we probably would choose to do, because either way, it's going to be expensive, right? At the resort areas. So guys, I appreciate your time. I know I'm on vacation. You might be on vacation too. If you are, I really appreciate you tuning into our Everything Phoenix YouTube Live. And hopefully you got some information out of this, guys. Right now, the bottom line is this. The housing market in Phoenix is resilient. Everyone, and I mean almost everyone, said in December of 2022, the housing market is going to crash. We'll call it 90+%. That did not happen. So I go back to that saying where it comes to, at the end of the day, as long as you know your exit strategy for what your real estate's going to be, your purchase, that's what matters. If you're on contract with your job and you think there's a good chance you might be moved because that contract is expiring in 8 months or 12 months or 16 months, okay, maybe you just rent, because that could be the best thing for you. But if you don't have that type of situation where you could choose to live in this area of town or this city, this area of the country for a period of time that's decently long, or you even have the appetite to where you could even be okay with being a landlord and renting your place out, then again, it goes back to that one saying I say all the time. I'll keep saying it till I probably die, which is, you don't wait to buy real estate. You buy real estate and wait. So guys, thank you so much as always for tuning into Everything Phoenix YouTube Live. And we'll be back next Thursday and with some more information on the housing market, see where it goes. Maybe by then things will level off already. It can happen as fast as a week sometimes. So keep tuning in, guys. We appreciate you as always. And until next time, stay classy, Phoenix.